All right. Good morning, good afternoon, and good evening to all of you joining from different parts of time zones. Uh, it is 7th of March 2018 and 2:30 a.m. Eastern or 1 p.m. Indian Standard now. And since the beginning of this week, we are combining both the sessions. Uh, the Asia and the UK at around these times and discussing Euro dollar index, Nifty 50 and the dollar INR. We sincerely intend to increase the instruments towards Dow Jones and Bitcoin in the same session. All right, maybe from the next week onwards. So we'll be doing 6 sessions or 6 instruments in one session. All right, so before we begin, a general disclaimer as a practice. What I've done is created a file rather than talking it out myself. I just created a file which says it all. So I need to read it before you. Dear brothers, traders and investors, please be aware that this channel sessions are solely for the purpose of education and specifically the wave counts, trend lines, Fibonacci, support resistance, etc. Any potential direction discussed here should not be considered as any form of personal or professional solicitation to trade or invest in forex, equity, or any other segment. These sessions are specifically for the purpose of spreading awareness and to help take informed decisions. You are humbly requested to look into your personal risk aptitude and also take financial advice before putting any of the above discussions to personal use. Also, please note that trading forex or any other margin instrument should never or be considered as a fixed return or investment. Please be aware that trading into such markets can be very risky and one can lose all or at times more than invested as the margin funds. Kindly leave your comments or questions if you have any on this content, and I'll be pleased to get back and assist you all to the best of my ability and capacity. All right, brothers, so let's get going on the story for the 4 instruments that we've been touching base along. Interesting things, great trading opportunities seen. Specifically for the Indian segments, the advisory part is not yet launched, but for the international segments, it is already launched. Those who are interested can claim your 9 days free trial. Just visit the web page japee.business.site and you'll find the details there. All right, let's continue with the story here, beginning the Euro USD. Let's start off with the daily chart first. I'm cutting out the other wave counts. We are beginning from the fourth wave, and by all probable chances there is enough proof and evidence now which says that a meaningful top could be just in place for the bears to take control over from here going forward. That could be the fifth wave, which most of us have been anticipating since the last couple of weeks now. Now, if you notice the drop from between 15th of February and 1st of March, it's done the first leg. So, and meanwhile it has also taken out the support at the 2200 handle. So two events occurred here that gives us the liberty to plot with a certain amount of confidence that we've got the first leg on the downside now. With a corrective rally underway, this could be a potential wave 2, leading way towards a potential wave 3, 4 and 5 could be on the south side now. Alright, as far as these supports are concerned, supports and resistances are concerned, a meaningful top looks to have been in place around the 25.55 mark now. That should act as a formidable price resistance for any intraday or interday rally which is taking place right now. Alright, watch out for, as we discussed earlier, watch out for resistance around 24.20. It has already marked that price action just a couple of hours back. Intraday high was made around the 24.33 levels. All right. So with all probability, the next support which should be the target for bears to take out could be 1.19 or maybe just 1.2200 before it pulls back again to drop lower back. All right. So a sequence of on the shorter time frames, we'll be going back on the shorter time frames as well. For the first time after quite a few trading sessions, we are witnessing the first bearish impulse. All right, that is what we have labeled as wave 1, and most probably we have also got a nice little corrective rally now which has been labeled as wave 2 on the right hand side. So let us that is the structure which has been shown on the right hand side here. Alright, so if we are correct in plotting waves 1 and 2 right there, then most probably it's looking to go south from here. Alright, okay, let's go back on the 4-hour chart. There are quite a few interesting patterns which can be witnessed here. One of them, let's draw a trend line first. If you were there with me following the story discussed yesterday, we were talking about the trend line break and a potential test of the backside of the trend line, which should now act as a formidable resistance. If you have been following the last 2 days story, there was a blank here which has been now aptly filled, and prices have just tested the backside of the trend line, which is now acting as a resistance zone. So yesterday what we discussed, to be watchful around the 20, 30 mark, which should act as a resistance, has now been met, and most probably a bearish reversal here should get things going on the south side pretty quickly. Okay, please remember, this is one of the best plays where you can take your positions, backside of the trend line being tested as a resistance zone here. Another pattern which could be kept for the long-term perspective is that a potential double top stays perfectly valid right there, right? And also, if you're looking for the conventional patterns and not the wave counts, okay, it's up to you whether you're just counting Elliott waves. I just began doing that 2.5 years back, so it's now become a part of my analysis altogether. But if you're looking for traditional reversal patterns, then you should be looking for or you should be paying attention to a potential head and shoulder being formed here as well. That is the head, the left shoulder over here or over there. That entire zone can be marked as a left shoulder. The neckline got broken just about the 1st of March, I suppose, for end of February, first couple of trading days of March, and then the right shoulder is being carved out right now. So it's a neat little head and shoulder pattern, straight head and shoulder pattern. Could be looking on the south side from here going forward. Alright, so that is one of the pattern. The conventional head and shoulder reversal. The second one, which should be looked as a long-term perspective, is potential double top and a reversal. Why? Because the support has already been taken out. All right, so all these things, all these points which has been discussed, the trend line which has been broken, the price support at 2200 which has been taken out, a potential head and shoulder reversal, and early signs of a potential double top which is just confirmed by a break below 2200 price action, all are pointing out towards a high probability trade setup in the Euro USD. Could be on the south side. Alright, so formidable resistance should be seen at 25.55. Ideally, prices should stay below that 25.55 resistance, and till the time it does, bears should remain in control, producing low lows and lower highs going forward. All right, so let's move on to the dollar index. It's quite about the reverse of what we've just discussed in the Euro USD. So let's continue the story from wave 4, a potential wave 4 of one higher degree. That's wave 4, and then we've got waves 1, waves 2, 3, 4 and 5, which mostly completed 5 down, and there's enough evidence to now prove that the fifth wave just got terminated at the 88.2530 mark. Alright, we just missed out on one rally actually. That's fine, but amazing trading opportunities coming just ahead of us right now. So with the fifth wave having been terminated, and the subsequent rally, okay, you can break that subsequent rally down into 5 waves at a lower degree. That's been labeled as wave 1, and the subsequent retracement or drop can be now labeled as the second wave, giving us should be pushing on the north side into waves 3, 4 and 5. Alright, so that's the overall bigger picture which you could keep in your mind on the daily chart till the time prices substantially remain above the 88.2530 mark. Should be looking to push higher from there. Alright, let's get down on the shorter time frames now. Once again, looking at the 4-hour chart, a couple of conventional patterns should be well noted here. First things first, the trend line, immediate short-term trend line got broke. it's not testing the backside of the trend line as exactly what Euro USD is doing. It's not necessary all the time that they follow each other meticulously on the opposite side. I mean, the dollar index is showing quite a bit of resilience, not dropping enough on this outside. I think it's taking a 50% support right there at the previous wave 4 as well. So it would not be incorrect if we assume and presume that the first leg gotten over around the 90 mark while the resistance or price resistance was being taken out and the trend line was also being taken out. And then can you see a three-wave drop? It's a clear three-wave drop. Proof enough to confidently declare that till the time prices remain above 88.25 now, should be looking to push on the north side. All right. And now the conventional patterns. If you are interested to make note of a potential and the confirmed double bottom, that's a long-term perspective view. A double bottom has now been confirmed. It's not about today, but it was confirmed right on the day when it broke above the 90-60 mark, going all the way towards the 90-90 levels up there. All right, so potential double bottom, and then let's not forget an inverted head and shoulder in the making, brothers. There you go. The head, left shoulder, right shoulder. Look at the angle of the right shoulder. It's quite above where the left shoulder was or could be projected. So an inverted head and shoulder in case of the dollar index, and a straight head and shoulder in case of the Euro USD, providing excellent trading opportunities. Kindly look on the potential direction that are discussed in the previous few minutes. All right. Now let's look at the potential story on the other two instruments, Nifty and dollar index respectively. Just a moment, I need to okay. That's Nifty 100. I need to get back on Nifty 50. Specifically for the Indian segment, I would like to repeat that please do not take these sessions as any form of trading advisory or anything like that. It's only about the passion that drives me discussing the wave counts for Nifty and the dollar index. Dollar INR, sorry, we'll be adding Nifty or Bank Nifty as well as quick as starting next week. When the advisories are officially launched, I'll be declaring that here in the room as well as on the web page. So that would be the right time when you might be wanting to take that as an official confirmation. All right. Okay, so isn't it that wonderful story here? If you have been following since last week now, you'll be happy to see the results here. All right, so let's again recount or take situational analysis here. What do you say, brothers? I think you would agree to the fact that okay, let's get it down. I think 9700 wave 4 of a higher degree was printed, and then what we see now is a clear termination of a potential fifth wave also completed, and we're now being able to talk about the fifth wave termination with a fair amount of confidence. You know why? Because of the fact, just give me a couple of minutes. I think the fifth wave got terminated at around the 11,200 mark now, and maybe if prices are not bouncing from here, the minimum, I repeat sir, the minimum requirement for a meaningful reversal for Nifty is now almost complete. It is just a matter of time if bears would want to test or take out 10,030 support. Even if it doesn't drop all the way below the 10,030 mark, I think we've got the numbers with us now, and with a fair amount of confidence. Let me get down to the shorter time frame. Trend line in place. I think we are clearly into the sell zone now, having no doubt there. There you see, we are clearly into the sell zone. It's quite possible the drop may continue at least towards another 100 points towards the 10,030 mark. Even if it doesn't, that is proof enough. What we required is there with us, right? So more or less now there's going to be formidable resistance around the 11,200 mark. We've got enough evidence to show that prices should now stay below the 11,200 mark going forward. Remember, 10-20% chance was given for yet another high above the 11,200 mark before Nifty could reverse. We are talking about it a couple of days back, but now with prices clearing to the sell zone, and more importantly, the wave counts are now telling a clear story that we've gotten our first bearish impulse. Now what it means is that there's going to be a snap reversal, but that's only going to be a corrective rally. But first, let's do the wave counts here to understand what Nifty is most probably expected to do in the next few days and weeks. So that was wave 1, and then an expanded flat wave 2, which got terminated around the 11,100 mark, and it clearly tells us a story that was the third wave, and then A, B, C wave 4. See, we were of the opinion of a triangle forming, but it is not forming a triangle. It was just an ABC flat as wave 4. And can you count 5 here? 1, 2, 3, 4 and 5. It's almost done, I would say. The fifth wave has gotten a bit extended in this case, but it's with a relative confidence now we are able to plot 5 here with wave 1 or I would say capital A. Now what does this mean for those who are joining us fresh? A warm welcome to all of you, brothers. You might want to go through the educational playlist for 15 videos, quite informational and very insightful, where you can go through the wave formats, Elliott wave counts, and Kindly don't forget to give your comments or ask any questions on the videos that you feel like. The basic pattern, the basic tenet of the wave principle, please pay attention here. I think we've gotten the first bearish impulse. Now what it means is that it could be wave 1 of 5 waves reversal, or it is at least wave A of a corrective drop, right? And what it also means is most probably from this part, from this level. See, we are here somewhere, all right? We are here in this leg somewhere. Most probably what we are going to witness now could be something interesting, which many of them might not have expected to happen. We should be witnessing something like this to happen. The Nifty, maybe a corrective rally which could take prices at least towards the 10,600 mark, or maybe 10,800. We don't know and we don't want to speculate on that, but on the basis of the objectivity that the wave principle brings on the table, after 5 down mostly is 3 up, at least in the corrective wave format. If you just allow me to place the Fibonacci ratios here, so according to the wave principle, after 5 down, which seemingly is over now or could be over any moment, there should be a 3-wave corrective counter trend move, which should be pretty swift in nature. So it could terminate somewhere around the wave 4, or it could push towards the Fibonacci 61.8%. That is not meant to speculate for right now. Watch out for a good amount of resistance between the zones 10,628 and the 10,780 mark. That should be a formidable resistance going forward. Ideally, prices should now stay below 11,171. These are spot rates. Ideally, prices should stay below that going forward. At least it looks like a meaningful top might have just been in place now for the Nifty. Alright, so that are the wave counts, daily, 4 hours and 1 hour. And now let's quickly look into the dollar INR. The story in the dollar INR, what we discussed in the past 2 days before yesterday, is almost coming to the first stop. Now, if you were there with me since the last week or so, what we have anticipated is could be an impulsive move which might have ended, or it might be in the last leg. Again, wave 1, wave 2, and then 1, 2, 3, 4 and 5. So wave 3 and then wave 4, and the 5th wave we might just have completed that. All right. And what it brings on the table is right on the opposite side, an impulse rally which seems to be completing itself. 1, 2, 3, 4 and 5 according to the wave principle. Again, that should be followed by a corrective drop. All right. Now that corrective drop may at least drop towards the 38.2% retracement, or ideally around the 61.8% as well, which is what is remaining to be seen, where this is going to be stopping now. and a minimum expected level around the 64, 50, 60 mark. You never know, it can drop towards the 64 as well, towards the 64 levels as well, but that should be it for the dollar INR pair. So 5 up should be ideally followed by 3 down, and we'll be bringing up updates for this story, and let's see how this story is unfolding in the days and weeks to come by. Alright, right now I think we are maybe in this phase, maybe in the first phase of a 3-wave corrective drop. Alright, so watch out for the correction to extend a bit more lower right now before the next leg resumes. That could be on the north side. Probability, our high probability remains on the north side. Alright, so we'll be bringing this session to a pause now with all the 4 stories being reviewed. I promise to increase instruments with the next week or the coming one, and thank you once again for being here, either watching it online or an offline mode, and a very humble thank you for all the new members joining in the family. And because this is only happening, I'm not doing any kind of marketing and stuff like that. It's only happening, either you are spreading word or it's being searched out there, but I believe that word of mouth is the one which is working out here with the grace of God. So I thank you, all of you, for helping me spread the word for this channel, and also helping serve its purpose, the wave counts and the education stuff. Alright, until next session, that is tomorrow 1 PM Eastern, I'll be signing off now, and you guys take care of yourselves. Good luck to your trades, and goodbye.